This is Dustin Hobbs with the California Mortgage Bankers Association. Welcome to Connect, our monthly podcast featuring one-on-one interviews with movers and shakers in the mortgage industry. As you know, if you've been following us this month, in light of the challenges that everyone's facing and the work from home atmosphere that's everyone's reality now, we're doing our part to at least provide you some more content. And so every week here in May, we're providing you with a new episode, a new bonus episode of Connect. So today, I'm really excited to welcome our guest for this afternoon. It's Anthony Romano. Anthony is the CEO of eScreenLogic. That's actually a local company for the California MBA. We're based here in Sacramento, and Anthony's company is based out in the Folsom area. So before we get, and Anthony, I'm sorry, is it Folsom or Gold River? I'm not sure what you guys technically call it out that way.
You call it Sacramento.
Sacramento, that's right. Sacramento based, right? All right, well, before we get started, I just want to make sure and let everyone know that if you have any needs as far as COVID-19 resources, always a great place to look is our website, the California MBA's website. We have a specific COVID-19 site set up with resources for our members that includes, the latest release from FHA or the GSEs, and we've got a lot of good resources from our own membership. So make sure and check that out at cmba.com/COVID-19. So with that out of the way, I want to welcome Anthony in for today's episode of Connect. Anthony, you're the CEO of eScreenLogic, which is, like I said, a Sacramento-based company that you guys deal with property and commercial real estate technology, or prop tech. eScreenLogic's focused on the due diligence process, environmental, but mostly most phases of the due diligence process. Is that correct?
It is. It is, yeah. Well, first of all, thanks very much for having me today. We're excited. We're thrilled to be part of the CMBA. Had a ball last year down in Vegas at the CREF conference. We spent most of our time on the commercial mortgage lending side, but you sort of said it. This COVID thing has been challenging for both residential and commercial lenders, and so I'm looking forward to the smoke clearing and getting back to some level of normalcy.
No kidding, no kidding. Well, tell us a bit more about yourself and the company, and maybe what led you to this point in your career, and how you became the CEO of eScreenLogic.
Yeah. Okay. Well, so really the last 15 years I've been involved in kind of what I call, the real estate finance ecosystem. It started with a company here in Sacramento that was a data and analytics business that we rebranded to CoreLogic in 2005. In 2007, it was purchased by First American, which most folks would think of as a $6 billion title business, but they actually have a number of segments and divisions underneath that umbrella. And in 2010, First American spun out about $1.5 billion of businesses that were all really aimed at the residential and capital markets industries of the mortgage cycle. And we went public under the moniker CoreLogic, included a tax business, valuation businesses, flood businesses, a lot of data and analytics and other technologies. And so I spent up until the end of really 2013 as part of the leadership team at CoreLogic, and then returned to First American as the Chief Revenue Officer of their mortgage solutions division in 2014, and really watched that company grow as they faced off with lenders adding a number of acquisitions well beyond the title business. And took the role of CEO at eScreenLogic really January of 2019, and saw just an incredible opportunity at CoreLogic and First American. Those two businesses did an amazing job, really helping to improve borrower experience, collapse cycle time, bring transparency and technologies to the residential mortgage business. And we see an opportunity at eScreenLogic to do very similar, only on the commercial side.
Interesting. I mean, to say the least, an interesting, career path. I mean, you spent, it sounds like, most of your career on the residential side, and then now to switch over to the commercial side. I mean, as you know, it's a completely different set of characters and players, and in some ways even a tighter community of players in the industry. What challenges have you faced sort of making that transition from one side of the business to the other?
Yeah, I mean, I think the cast of characters in terms of the institutions who are deploying capital, whether it's on the residential or the commercial side, particularly with national, regional, and community banks, is largely the same. Credit unions do a fair amount of commercial lending as well, and then there are a host of non-bank, non-traditional lenders that do hard money, mezzanine, bridge type of financing on commercial. So the transitions have been pretty easy. I would tell you the last 4 or 5 years in residential, the term fintech you hear quite a bit. There's been a lot of investment and a lot of technology trying to really collapse the cycle time of a commercial transaction, right? The fact that it takes you an hour to get a $100,000 loan for a Tesla and takes you 30 to 45 days to close a refinance on your home. The industry is working on that, significantly. It has been, and there's been great strides out in the market. On the commercial side, I would tell you fintech, prop tech, maybe a little bit behind, and there's just real opportunities. Disruption's probably too strong of a word, but real opportunities for efficiency, to take cost out of the process, and just to make it a lot easier for a borrower in a commercial transaction to get a deal done.
Absolutely. Yeah, I couldn't agree more. Yeah, it's interesting having in our sort of in our space on the association side, we've seen sort of both sides of the industry over the past, at least I have, over the last 15 years or so. And definitely there is a market difference in the sort of where everyone's at technology wise, and communicating with. It's just a different borrower segment too. So that's sort of made the transition technology wise a little different, and a little bit different speed. On the residential side, I mean, it's been lightning quick over the last 5 years or so, the changes in the industry. And on the, like you said, on the commercial side, it sounds like there's a lot of opportunity there. So a question for you. Obviously the biggest thing in the news still right now is the pandemic, the COVID-19 pandemic, and all the challenges that it brings with it. So what are you guys doing at eScreenLogic there? What pains are you solving for now, and both now and in the near future? And maybe how have you guys adjusted, and what are you hearing from the industry and your customers as to what maybe challenges they're facing?
Yeah, so again, both on residential and commercial, these obviously the counties, and then it grew to states, and now it's pretty pervasive on the shelter in place, and we're just starting to see some opening up. But for things like valuation services that require you to go inside a dwelling, environmental assessments that require field site reconnaissance, we had to kind of figure out alternative ways to do that with some virtual technologies. We launched some really innovative solutions on the environmental side, a product called EnviroScreen Pro that essentially is a full phase 1 environmental site assessment without the site recon piece of it. And it was all, really all focused on helping our clients continue to close transactions. There was a big pipeline as you were into March, end of March, that needed to get closed. And we were able to help, sort of customers deliver. We did that from remote locations. So we've been 100% operational since right around the 10th or 11th of March, where our teams, our operations centers in Florida, Texas, and California, all those folks are working remote from their homes using technologies like this, and continuing to serve the client. So getting those deals done was super critical. We've definitely seen a bit of a slowdown, and we would suspect that particularly in certain asset classes like retail and hospitality, and a couple of the others, property types, it'll be a little challenging. It'll be a little difficult here as we open up, but we see refinances starting to pick up. Industrial and some of the specialty asset classes are still beginning to pick up, but it'll be tough sledding for the whole industry for a bit, would be my take.
Yeah, I think so. I'm curious here. Sounds like you guys are doing a lot to change sort of the landscape on the commercial real estate due diligence side in the process there. So tell me, where are you guys headed, strategically? And if I was to, say if we had this talk, a year from today, what would we be talking about in terms of ways that you guys have, continued to help the industry change and transition and modernize?
Yeah, okay. So let me take that in a couple of bites. So when you think about commercial, first of all, residential is a single family dwelling, kind of duplex, manufactured housing, trailer, etc. And then beyond that, everything is commercial, right? So from vacant land through every other asset class and property type. When those commercial transactions begin, so an application starts, there's a whole host of things that are kicked off to help underwriting make a go or no-go decision. Things like an environmental assessment, evaluation of the property, a flood zone determination, potentially a property condition assessment, etc. And what lenders have had to do in the past is manage, a panel of lots of vendors in different geographies and footprints, and they would make phone calls and they'd place emails ordering all of these various due diligence services that ultimately wind up, in a file for an underwriter to sort of review. What we've done in late last year, we launched what I think is the industry's most comprehensive platform called Radius. And this platform allows a lender, somebody in the lending operations, a loan processor or credit admin, to log on and identify the property and then order, status, get delivery, and archive any of these critical CRE due diligence services. So it moved you from back and forth on email and phone calls and trying to manage multiple providers to, a one-stop shop in an automated way to be able to quickly and easily order this information. So directionally for us, deploying that out into the marketplace, we've got probably 65%, nearly 70% of our clients that use us via Radius. Certainly can still place a phone call or an email for anything they'd like to do, but it becomes just such an easy way to manage the transaction, the loan transaction for them. We recently just launched extension of that platform where we've added some partnerships with iconic firms and really recognized firms in the industry like Clear Capital on the commercial property valuation side, like Loretta, who I think is really the leader in tax and flood. We offer commercial flood zone determinations via the platform. We're working hard with a number of data providers to expand some of the pre-qual and early pre-screen type of reports that you would run at application to look at markets and get early indications of value. We have a patent on a product called Enviro Prescreen, which is an environmental pre-screen tool that was generally delivered to a client in about 4 hours, which in the industry there's really nothing like it, right? The market would normally order halfway through a transaction an environmental assessment like a phase one. And a phase one ESA is kind of the gold standard of an ASTM environmental review. And that's a $1,500 to $2,000 product that often takes a couple of weeks. We created this pre-screen tool to help lenders and borrowers and investors determine what type of environmental assessment they need. It might not be a phase one. It might be a 3-day quick turn of a desktop. So this product that was delivered in 4 hours, say 5 months ago, today runs in 20 seconds on the platform. So a user can come onto Radius, put the address in, run the property, and really get a 6 or 7 page, very comprehensive report about the subject, the adjoining and adjacent properties, and have some risk scoring to help them make a decision what they want to do next. We think there's a lot more to do in those areas around, sort of pre-screening commercial properties.
And that's got to be a huge competitive advantage for your customers on that. I mean, just the speed difference. I mean, we're talking hours and minutes and seconds instead of days and weeks. That's got to be a huge change.
Yeah, and the winner ultimately is our customer's customer, the borrower, right? So the bank or the credit union or the non-bank lender is working with the borrower, and these are there's 10 residential transactions for every commercial transaction, but of course the dollars involved in commercial are significantly larger. And so when you're collecting from a borrower, thousands and thousands of dollars at application to pay for some of these products that ultimately, again, the borrower pays for, hit the settlement package. The more you can reduce those fees and still manage your risk from a liability standpoint, the better. So that with this early indicator tool helps you not have to spend thousands of dollars in weeks if it's not required. And that was very difficult to ascertain before we developed that.
Absolutely. Interesting. All right, well, let's switch gears here for a second. I'm curious. You've been, again, on the sort of the residential side and now the commercial side. Networking the sort of especially the face-to-face aspect of networking it's obviously a big part of any business, but I think it's particularly important. I've seen over the last decade or so here on the commercial side. It's just one of those things where it's a smaller universe of players than on the residential side, and it's really important to have that sort of face-to-face, because again, like you're saying, I mean, on an aggregate, it's not the same dollar amount as on the residential side, but those individual loans are much more, I mean, the risk is much greater than a single residential transaction. So I'm curious, from your perspective, how are you guys managing to accomplish networking these days and get the message out there and interact with clients and prospects?
Yeah. Yeah, so it's been, I mean, everybody's got that same challenge. The technologies like this GoToWebinar, obviously Zoom, we've done, we do a Zoom call internally with our staff across the country every morning. What's hot, what's not, who needs help, and what are we hearing from our clients in the marketplace. It's been incredibly successful with many of our clients and prospects who are in home offices, where we have meetings about different pieces of the business or our product line or something of that nature. Zoom's been great. We've leveraged LinkedIn a ton with messaging, with videos, introductions of different pieces of the business or new products using sort of videos. But it's really hard. I'm hoping that the handshake and the hug is not a relic of the past, and that at some point, post this social distancing, we can get back to some of the networking, because I couldn't agree with you more. In this industry, when you talk about brokers and bankers and title businesses and all the ancillary participants in the ecosystem, they like to network and they like to share and help each other's businesses. So I'm looking forward to seeing it come back a little bit.
Absolutely, I hear you. So a question for you, and I guess we're switching gears again here a little bit. When it comes to advocacy, right now, I mean, it's really interesting. There's so much focus on the residential side of the business, but just prior to the outbreak of the pandemic, and I mean, it will be an issue going forward here. We've had issues here in California with rent control, with split tax roll, both being legislative efforts and potential ballot measures. So where do you see, what are some of the, maybe the unintended consequences that you see when it comes to either one of those, either split roll or rent control?
Yeah, and I paid particular attention. I think the NBA, the CMBA does a tremendous job with some of the lobbying and working through, some of the legislation with the regulatory bodies and various agencies and with your members. I think there's a pause button on a number of things right now, right? As you're looking at so many of the retail and sort of shopping centers, and even a lot of the multifamily where rents aren't getting paid, where there's forbearance happening. I think you have a lot of people, hitting a pause button for a period of time until the dust settles and we can make a better decision. Because while, depending on what side of the aisle you were on pre-COVID, those were two initiatives that people were pretty passionate about. And I think that there's, other initiatives that right now are being dealt with. So just as an example, many of our clients, the normal, 7A and 504 SBA product or a normal traditional commercial loan has taken a backseat to the PPP program. So many of our clients have kind of all their troops focused on helping their clients, medium and small businesses, get these payroll protection applications in and try to get funded. And when I bring up these kind of questions you just brought up, I think people are thinking about it right now. I really see that we'll need to get through, the second quarter and into the end of the summer, and these issues will get right back on the table.
Are you seeing a different sort of vibe with your non-bank lender partners?
Yeah, that's a really interesting question, because you had so much of the government stimulus that was aimed at different segments and different industry participants. The non-bank lender, who has no deposits and things of that nature, I'm not sure where they fit sometimes. And so I think that it's kind of a double-edged sword. They may not have had access to some of that capital and a couple of those programs, but they're also a little bit more shifty and a little bit more nimble. They're able to work with, there's still deals getting done, right? And as valuations start to change, and I think they will, I don't think you'll see catastrophic drops like we did in 2008 to 11 type of a thing, but I think you'll see pressure on valuations. So I think there's a lot of money on the sidelines, and with opportunistic both corporations, LLCs, and individual borrowers looking at these properties. And I think you may see the non-bank lenders maybe lead in terms of some transaction volume as we're coming out of this, and maybe some of the regional and community banks and credit unions would lag as they're focused on some other programs.
That's interesting. Interesting. Yeah, I think you might be right there. All right. So how about any tips for both lenders and/or even a vendor in the industry like you guys to maybe not just survive the next 6 to 12 months, but thrive? I mean, what would you say is something you got to have number one on your list?
Yeah, you got to get the PPP. Yeah, no, I mean, it just as a business and even cross industry and forget just the real estate ecosystem right now. If you're a small and medium business, companies weren't built to not have revenue or to have revenue declines of 50 and 75% for multiple months. And so, as a leadership team here, navigating these times and proper expense management and judicious use of those resources, taking care of your employee base, making sure culturally everybody understands where we're at and how we're getting through this together, and ultimately what reopening looks like both in the office and with the economy. I think is super critical. And then I think being sensitive to meeting your customer where they are. Again, like I say, we've got a lot of clients that we're doing a bunch of new stuff out in the market we think can help, but they're focused on some other things, helping their clients get payroll protection and some of these other things done. And so you got to be a little sensitive at the moment to where people are individually and their entities. But I think in the same vein, continuing with outreach and exposure and awareness and making sure that people understand post the dust settling, business will return, and becoming efficient and reducing costs and improving a borrower experience is a big deal for any one of these lenders. And we want to be there. I mean, we want to be there. We're launching an initiative that we call collateral certainty. And when you think about a commercial property and its due diligence, you think, again, environmental, valuation, flood, and inspection, and all of those done right, provide really strong protection of the transaction and a post, transaction catastrophe, right? You get any of those wrong, and loss severity becomes a big deal for lender and borrower. So, for businesses out there, now's a good time to innovate. Now's a good time to invest in your technology and expanding product and platform, so that again, as the dust settles, you're prepared to really help the market, your clients.
Well, I'm curious. You mentioned new product that new product. How does if I'm a vendor out there, and you mentioned being sensitive to your clients' needs in the current environment and all that. What maybe practical steps? How do you do that when you've got, like you said, a new product or new service that you're wanting to roll out, something you've been working on for a year or more, and just bad timing? But how do you sort of navigate that?
I think again, I can only speak specifically for us. There's certain individuals inside of these institutions at any bank, credit union, or non-bank lender that we send emails, we've left some we leave messages, make phone calls, you do a LinkedIn connection, and often when we talk about innovation and real change in the marketplace, chief credit officers at banks, chief lending officers at banks, heads of SBA programs, they're open to a conversation. So I've had honestly dozens of conversations, as has a number of folks on my team the last few weeks, just a 5 or 10 minute catch up with a prospective bank and lender that at the moment they might not light something up, but they're curious as to where this market's going, and that's where we're kind of skating to where the puck's headed. And we know there's an opening, and we know there's an opportunity for these banks to make some improvements in their process and technology. And as that happens, we want to be there for them.
Awesome, I appreciate that. So last question for you. What any key message that you want to leave the members and the audience with today?
Yeah, well, had talked to Susan Milazzo, who again has been just a great partner, the CEO of the CMBA, a great partner of ours, and we really to to a CMBA member today that is doing commercial lending, this platform Radius and this environmental kind of pre-screen tool, we think it really hunts. And we've had incredible feedback from clients and early innings in its evolution in the marketplace. But we'd like to make that platform and that product, that's all subscription stuff, a no fee, a freemium model to CMBA members through the summer, so that they can get on, sort of give it a shot, build some efficiencies, get comfortable, use this pre-screen application to sort of drive their workflow. And so we'll memorialize that in some formal fashion, whatever you guys think. But that's something we'd really like to do to thank the CMBA for being such a solid partner, and then really to your members to sort of help accelerate their return into the lending process.
Well, I appreciate that, Anthony. Yeah, very generous. And I'm sure the members will take advantage of that. And I mean, especially right now, I mean, anyone looking for an edge and looking for a way to, both save some cost and improve their process and their service to their own clients. I mean, I think that's a great opportunity. Again, thank you, Anthony, for your time today. Appreciate it. If you want to find out more about eScreenLogic, go to what's the website, Anthony?
Yeah, they can go to eScreenLogic.com. They can certainly email support@eScreenLogic.com for any information, questions, etc. We're happy to help in any way.
Awesome. Hey, appreciate it, and thanks again for your time, Anthony. And if you are out there and watching and liking what you're hearing, make sure and subscribe on our YouTube channel here, or you can also subscribe and listen to us on Apple Podcasts and SoundCloud as well. And we'll be back next week for the final bonus episode of Connect this month, and then following that into June, we'll be back to monthly podcasts after that. Have a great day, everyone.